All of the content contained in this webcast is for informational purposes only. The investments and strategies contained in this webcast may not be suitable for you. Please consult your own independent financial advisor before making any investment or trading decisions. Good morning, traders and investors around the world, and welcome to Wednesday's edition of premarketinfo.com. Dennis is still out on business, so I'll be going solo today. Obviously, the market has not taken kind to the words that the Feds provided yesterday. Had a major sell-off in the market after failing to make a new high above 14.1975. Levels to focus on in the S&P this morning: Monday and Tuesday's low at the 1390 level and 1399 even and 1399.50. It's critical for the S&Ps to get above and hold these levels in order to take a shot at the close. Minor resistance comes in at 1402.75. As far as major support, folks, we don't have major support until 1386.50, which is our 4-day low. Moving on to the Big Ten. ExxonMobil took it on the chin yesterday. The only thing we need to focus on ExxonMobil here is this $85 level, folks. It's traded at that level several times. That was yesterday's low, treading above it just in the pre-market, just by a few pennies. If in fact we do take out this $85 level, we'll be looking for 84 to trade today. Looking at the pre-market activity, 80 opened at 85.80, has been straight down, and buyers are stepping in to support this stock at $85. Moving on to our next component, Apple Computer. Don't tell Apple Computer that the market went down, making a new all-time high yesterday at 632.21 with a 629.32 close. Really, the only thing you can say about this stock, folks, is it's hard to be short it no matter what the market's doing. What we need to focus on in this stock is 623.14. That's been the pre-market low. Absolutely no support in that stock down to 621.45, which was our former all-time high. Moving on to IBM. For the first time in a long time, has been extremely weak in the pre-market. I was going to say to focus on this 208 level as support. We have crashed through there in the pre-market, so I will use that now as resistance. There's a stock that made an all-time high at 210.69 yesterday. Might finally may be due for a correction. If the sell-off continues in just one direction, the major support comes in at the 4-day low at 206.02. Our next component, Chevron Corporation, faring much better over the last 2 days than ExxonMobil. Tuesday's low at 106.23. We're trading just below that market, just below that price. Look for resistance anywhere at the 107 level, as 107.14 was yesterday's close. Major support in Chevron Corporation can be found at the 4-day low at 104.92. Mr. Softy being pretty soft as of late after hitting 32.95 a couple weeks ago. The stock has been in a sell-off mode. We are currently trading below Tuesday's low, which was 31.66. I will use that as minor resistance. We're actually trading at 31.68. So Microsoft is opening into support. No resistance up to the close at 31.94. Coming back on the downside, folks, under this 31.66 levels, there are only minor support levels down to 31 even, which was the low back on February 23rd. We'll talk about GE when we get to our market movers portion. One stock that seems to be bucking the trend again, your defensive stock, Procter & Gamble, trading up a smart 61 cents in the pre-market after selling off yesterday. 67.70 has been the pre-market high. There is a little bit of volume associated with this move. As we've discussed over the past, I don't know how many weeks, the major resistance sitting just above the 52-week high, which is 67.95. Major resistance at 68. Huge institutional size there that the high frequency traders have been feasting on. For a shorter term number here, Monday's close and Tuesday's high was at the 67.56 to 67.60 level, so that will be minor support. AT&T, the threat of 40,000 workers walking out on the job has seemed to have affected this stock a little bit. What we need to focus on the upside is the double top at 31.59 to 31.60. Coming over the last 3 days, you've had the lows moving up, 31.15 from Friday, 31.27 from Monday, and 31.33 from yesterday. Should be tough sledding on the downside all the way down to that 31.15 level. J&J, after having that pop a few days ago, struggling to hold the 66 level. Monday's high, 66.30. That was protected yesterday. Couldn't quite get there. 66.15 was yesterday's high. We are now trading well below 66. It looks like that level is failing once again. Let's keep an eye on Tuesday's low. It's 65.5. And the 4-day low, it's 65.20. Moving on to our final component in the Big Ten, Pfizer Corporation. Seems to be holding up fairly well here in the pre-market. Another defensive stock, only trading down 14 cents. We'll find resistance at the close now at 22.54. Minor support at 22.35, which was yesterday's low. And major support at 22.18 to 22.26. Moving on to our market movers here, and one of our market movers happens to be in the Big Ten. GE, General Electric, after flirting with the $20 level at the end of March, has not been able to hold that level. A series of highs between 20 and 11 and 20 and 14 has really put the halt on this rally. And now you get the dreaded Moody's downgrade. Never a good thing for a stock. Even though it's only one notch, folks, that's not what the street wants to hear. Buyer beware here in this General Electric. Was going to tell you 969, 970 was going to be major support. We are currently trading at that level in the pre-market, so that will act as minor resistance. If GE can get a pop here, I expect to find resistance starting in 1980 and then also 1990 and of course the close at 1996. Now that $20 level will be guarded as closely as ever. European jitters again are starting to have a little bit of a toll on the bank stocks. The main one, Bank America, flirted with the $10 level, could never really muster a close above that level, and now we have the old familiar pattern of sitting on a cliff here, folks. 935 was your high back on Friday. Double bottom at 941 yesterday is not holding. Expect to find resistance at that 941 area. And folks, below this 932, you have your small gap to fill. But it looks like this thing could be heading towards $9. Another stock affected by the European concerns, Goldman Sachs, had a nice run, was able to trade above 128 to 128.72. You are now getting a sell-off in this stock. Let's look for the first bounce to come in this stock here at 119.82. That was our low back on March 14th. Another minor stopping point of 118.40. But if this market, the overall market, goes into major sell-off mode, this 115 level could be coming into play. J.P. Morgan facing a lawsuit from the CFTC over the collapse of Lehman Brothers. It's hard to speculate on the collusion that happened on the street during the collapse of one of Wall Street's icons. Stocks holding up pretty well in the pre-market, 44.76. is where it's currently trading, down only 66 cents. Looking at major support to come into this stock right here at these lows, 44.44 all the way down to 44.21. Major support. If you do get a bounce in this stock, expect the sellers to appear right at 44.97, which was yesterday's low, guarding that gap. $45, another psychological level. We're starting to see some orders accumulate in the book. Not all stocks are down this morning, though. Monsanto, higher corn prices, is supporting this stock. Also, good earnings expected. Could have told you to buy a breakout over 82 here, but it looks like the boys in the pre-market have already got it above that level. What we need to focus on is the pre-market high at 83.40. That coincides with the February high of 83.94. Coming back on the downside, needs to hold this $82 level, which is where we broke out from, or Monsanto could slide back down perhaps to 80.73 for minor support, but the major support would be at 80, which is the 2-day low. Moving on to our final market mover, SanDisk lowers revised first quarter sales forecast. Not what the street wants to hear. The stock has been in major sell-off mode since that news came out. Trying to find a home here, folks. Look for support at this 46.06 level. That has been the pre-market low. We've gotten a little bit of a bounce off that, but has not been able to get against above 46.50. Above 46.50, someone definitely wants out this stock at 47. If the sell-off continues, folks, you got to look at all these lows here that we had in the 45.50 area. That's been supporting this stock since January. Look for a major bounce off that level. As we speak, the S&Ps are continuing to sink. We haven't seen a 12-point down open in quite a while here. A lot of times you get a little bit of a pop off that. Downside target as it stands with the 1409 high is 1393.75. Once again, I want to reiterate the importance of the double bottom from Monday and Tuesday at 1399 and 1399.50. That is going to be resistance now and a level the market needs to hold. And reiterate the major support at this in the index at 1386.50, which is the 4-day low. And as you notice, when I was going through many of the stocks in the Big Ten, I mentioned support as the 4-day low. So let's keep an eye on all those levels, and I'll be back with your 10:30 update.